Say what you will about the Fed's latest move and what it means for stocks. One thing is for certain, it's good for gold. In the hour after the Fed announcement yesterday, gold touched a record $17.81 an ounce. First Eagle's bet on gold is one thing that has helped the global fund beat, what, 93% of its peers, I believe, this year. And Matthew McLennan is the manager of the fund. He's sitting right beside me. $31 billion, Matthew, is what you have under management. You took over from a very famed money manager back in 2008, but your performance has pretty much been consistent with his, because over the 5-year time frame, the global fund has beat all but 5% of its peers. So let's talk about gold, what role it plays in your fund, how much you're betting on it, and, of course, whether you think the run that we've seen can continue, especially in light of the Fed statement yesterday.
Well, at First Eagle, we're very conservative investors, and for us, gold is a source of ballast in our portfolio. You know, ultimately, we're investors in enterprise, in business for the majority of our portfolio, but when we look at gold, we view gold as nature's currency. It can't be printed, and so its value is inversely proportional to the belief in the man-made system. And so when we go through a period like
Ron Paul versus Ben Bernanke.
When we go through a period like this, where people worry about the credit quality of government paper, or where the prospects for the real returns on government paper are very poor, then gold has symmetrically been bid up. But for us, when we own gold in a portfolio, we don't own it because we have a directional view on gold. We own it because we're predominantly investors in enterprise, and it's a source of ballast.
Do you own it because you see risks to the global financial system?
I think one of the risks that we've been talking about at First Eagle, which is a little bit different from the whole S&P default risk assumption, is that we exist in a time with great fiscal deficits, great economic challenges, and the policy response to that is a sustained period of low real interest rates. And I think we've seen that yesterday with the Bernanke approach. And in a world of very low real interest rates, investors have to think about what to do thoughtfully to preserve the real corpus of their capital, and that's the challenge today.
Matthew, why not hold gold as an asset? Why not think of it as something that appreciates, because it has been appreciating, and it may continue to appreciate?
Well, gold is an asset that we've held for many, many years. In fact, we've held it for decades.
Jean-Marie was a big fan.
Absolutely. Jean-Marie is a big fan of gold historically. But if you look at the value of gold over very long-term periods of time, yes, it has preserved its value relative to the general price level, so it has appreciated in general terms. But when we say we don't have a view on the price of gold, that means that in the short term, over the next 6 months, over the 12 months, we don't have a view on gold, because ultimately what gold does will be a function of belief in the system. So if things got better all of a sudden, if corporate earnings stayed firm, if real interest rates went up, then maybe gold wouldn't do as well. So we want balance in our portfolio, and that's why it's there.
So what do you have a view on?
Well, if we look at our portfolio, we like a balance point between businesses that will participate in the march of man and businesses that are resilient and defensive. And so if you look at the equities that we own, and we think in some ways equities are the solution to the problem because they're the source of productivity, you know, we own a range of businesses that we think are available at low multiples of cash flow. Businesses like Cisco, the food service producer, which is defensive with a dividend yield well above the Treasury yield. And businesses like Cisco, the routing company, which is very depressed and more economically sensitive, but under 5 times EBITDA.
5 times EBITDA. Well, it is trading at a discount, but it has been for good reason.
Indeed.
All right, Matthew, lovely to see you here. Please come back. Matthew McLennan, he is among a new generation of star investors. He runs the global fund at First Eagle Investment Management, beating 93% of its peers this year, and gold has played a role.